If you're an investor seeking dividend income, there's two primary strategies. There's dividend growth investing, which is investing in companies that tend to have lower yields, but are growing their dividends at a much more rapid pace. And then there's high yield investing, which is investing in companies that have just that, higher dividend yields, which usually coincides with lower dividend growth. And in today's video, we're going to take a look at 10 high yield dividend stocks that could have you earning over $1,000 in dividend income rather quickly. And all 10 of these dividend stocks have dividend yields above 4%. And before we begin, do me a huge favor. Click that like button down below. Subscribe to the channel so you'll be notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Russin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, taking a look at 10 high-yield dividend stocks. Again, all 10 of these dividend stocks have yields above 4%. Some of them with yields much, much higher than that. We'll look at the company overview, take a look at their past performance, of course, their dividend stats, and their current valuation. Let's begin with high-yield dividend stock number 1, which is Altria Group, stock ticker MO. There's no need to wait. Let's take a look at one of the highest yield dividend stocks on our list of 10 stocks today. Altria Group, one of the largest tobacco companies operating here in the U.S. The one thing going against Altria Group has been the declining cigarette volume, and this has been going on for a number of decades now. So it's really nothing new. And again, I understand, just to put this out here right away, is that investing in something like Altria Group is not for everyone. So if this one's not for you, then you could jump ahead to high yield dividend stock number 2. But for those of you that don't mind, let's continue with Altria Group. Altria Group is, again, one of the largest tobacco companies here in the U.S., and they currently have a market cap of $73 billion. And over the past 12 months, the stock is down 9%. Now, again, I mentioned that volumes are declining. However, the company, what they have in their corner is strong pricing power. When you have strong pricing power with an addictive product, it bodes well for the company. However, the company isn't solely focused on one single product. They're looking to diversify their product offering, going into more heated tobacco products, smokeless tobacco products, other types of nicotine products, and even into cannabis as well. This is a company that generates huge amounts of cash flow, which allows them to pay a very high dividend. Speaking of the dividend, shares of MO currently yield a dividend of 9.4%. Again, the second highest of our 10 dividend stocks we're looking at today. That is a juicy dividend for income-seeking investors. The dividend has grown for more than 50 years, making this company a dividend king. In terms of valuation, Altria Group is a solid value play with a nice floor built in. Analysts are looking for the company to generate EPS of $5.10 in 2024, which equates to a PE multiple of just 8.1 times. Compare that to their 5-year average of 10.2 times. So with Altria, you get ultra high yield combined with a low valuation. That leads us to high yield dividend stock number 2, which is Chevron Corporation, stock ticker CVX. Many of you know that Chevron is one of the largest oil producers and energy companies here in the U.S., but they're actually one of the largest in the world as well, and getting larger with their acquisition in 2023 of Hess, which is still going through regulatory review. Currently, shares of Chevron have a market cap of $277 billion, but shares have struggled over the past 12 months as they are down more than 15%. Chevron has a solid balance sheet, and with the price of crude oil stabilizing right around $70 and looking to climb higher from here, this is all bullish things for Chevron moving forward. The company also generates huge amounts of free cash flow, which they allocate in a number of different ways to return money back to shareholders. One being through share buybacks, which last year they announced a $75 billion share buyback program, to which it doesn't have an expiration date, and they'll be right around $15 billion in share buybacks per year moving forward is the plan for the company, and they also pay a high-yielding dividend. Remember, as the company buys back shares, it's taking shares off the market, which makes your shares that you own that much more valuable. In addition to the buybacks, the company also pays a generous and stable dividend that yields 4.1% and has been growing for 36 consecutive years, making the company a dividend aristocrat. Looking at this fast graphs chart, you can see that analysts are looking for 2024 EPS of $12.89 per share in 2024, which equates to an earnings multiple of 11.4 times, well below their historical average of 14.5 times. Now moving on to high yield dividend stock number 3, which is British American Tobacco Company, stock ticker BTI. This is a competitor to Altria Group, except they're more worldwide. And this happens to be the highest yielding dividend stock of our list of 10 today. But first, let's take a look at the company overall. BTI has a market cap of $67 billion, and over the past 12 months, the stock is down more than 20%. So not that much different than Altria Group. And as I mentioned, the dividend yield is the highest, sitting at 9.5%. And when you have that high of a yield, it is custom to not expect much in terms of dividend growth. Like Altria, BTI is also very cheap from a valuation perspective, with analysts expecting adjusted EPS of $4.82 in 2024, which equates to a forward PE multiple of just 6.3 times. Although single digits is nothing new to the company, as it historically trades at a multiple of nearly 9 times over the past 5 years. Now moving on to high yield dividend stock number 4, which is Enterprise Products Partners, stock ticker EPD. This is another energy company with more than 50,000 miles of pipelines across the country, hauling things like crude oil, natural gas, liquid natural gas, and other products. EPD has a market cap of $59 billion, and over the past 12 months, the stock has climbed 5%, trading in a tight range between $25 per share and $27 per share for much of the past 18 months. Improvement in both EBITDA and cash flows has made the company look that much more intriguing, especially from an energy value play. In terms of the dividend, EPD pays a high dividend that currently yields 7.7% and is also a dividend aristocrat, having increased their dividend for 25 consecutive years. Looking at valuation, analysts are looking for the company to generate EPS of $2.67 per share in 2024, which equates to a forward PE ratio of 10.1 times, below the company's 5-year average of 11.1 times. Now moving on to high yield dividend stock number 5, which is Verizon Communications, stock ticker VZ. As many of you know, Verizon is one of the largest telecommunication companies in the world today, competing closely with the likes of AT&T as well as T-Mobile. And communication, data, wireless, all this connectivity is more important today than it has ever been, especially with more folks not working in the office, but working remotely. Verizon currently has a market cap of $162 billion, and over the past 12 months, the telecom giant has seen its shares fall roughly 8%. However, over the course of the past 3 months, they've gained some momentum, as shares have actually rallied more than 20%. The telecom giant generates huge amounts of free cash flow, which is very important for this company, not only because they pay a high dividend yield, something that they've increased for a number of years, but also one of my concerns with them is their huge amounts of debt. So large amounts of free cash flow help to pay down debt and also pay down that dividend. Speaking of that dividend, as this video is about high yield dividend stocks, and investors definitely get a nice dividend payout with Verizon, as they currently yield a dividend of more than 7%, and having increased that for 19 consecutive years. Verizon has a combination of high yield and low valuation. We're talking single-digit PE ratio. Analysts are looking for EPS of $4.60 in 2024, which equates to a PE ratio of just 8.4 times, which is well below the company's 5-year historical average of 10.5 times. High-yield dividend stock number 6 is Vici Properties, stock ticker VICI. For those of you unaware, Vici Properties is actually a REIT, and they happen to be the largest landlord on the Las Vegas Strip. And they also happen to be my largest individual REIT holding within my portfolio. And if you're interested in seeing my entire portfolio, then you can head over to The Investor's Edge, which is my weekly newsletter. And for premium subscribers, I post monthly portfolio updates. I'll leave a link down in the description below. Vici Properties currently sports a market cap of $32 billion, and over the past 12 months, the stock has fallen 8%, as it has been negatively impacted by higher interest rates, which are hopefully coming down in the near future, according to the Federal Reserve. This company has some high-quality assets within their portfolio. Just looking at the Las Vegas Strip, they own the likes of Caesars Palace, MGM Grand, the Mirage, and the list goes on. Vici has only been public for about a handful of years, but each and every year that they've been public, they have increased their dividend at a healthy clip. As I mentioned at the beginning, high yield dividend stocks usually do not have fast growth, but Vici bucks that trend as they sport a 5.3% dividend yield and a 5-year dividend growth rate of 10%. When it comes to valuing REITs, we don't focus on EPS like we do with non-REITs. Instead, we focus on FFO, or funds from operation. This kind of backs in that huge amount of depreciation expense that goes into the EPS calculation because of all the real estate we own. In 2024, analysts are looking for Vici to generate AFFO, which is adjusted funds from operation, of $2.25 per share, which equates to a price to AFFO multiple of 13.8 times, well below their 5-year average of 16.5 times. Let's go from one REIT to another REIT, and that leads us to our 7th high-yield dividend stock, which is Realty Income, stock ticker O. When it comes to REITs, Realty Income is often the gold standard, and retail investors love Realty Income because they pay a monthly dividend, and they've coined themselves the monthly dividend company. Realty Income also happens to be the second largest individual REIT position within my portfolio. The REIT currently has a market cap of $43 billion, and over the past 12 months, shares of O have been under pressure due to those high interest rates, which has resulted in the stock falling by more than 10%. When it comes to consistency and operations, there's not many better REITs out there than Realty Income. Again, as I mentioned, the gold standard. They have built a portfolio of more than 13,000 properties out there, a number that continues to grow. They're primarily focused on the retail tenants, but they also have properties within industrial, warehouse, and now leveraging more into gaming, which just tells you how much more I like Vici Properties. In terms of the dividend, investors are getting a yield of 5.2% at the moment and 26 years of dividend growth, making the company a dividend aristocrat. In terms of valuation, as I mentioned with Vici, when it comes to REITs, we don't focus on EPS, but rather focus on FFO or AFFO. Looking at this fast graphs chart here, you can see that analysts are estimating AFFO of $4.19 in 2024, which equates to a multiple of 14 times, which is still well below the company's historical average of 19.1 times. Moving on to high yield dividend stock number 8, which is Pfizer Incorporated, stock ticker PFE. Pfizer is a pharmaceutical company that was well known before the pandemic, but became even more well known during the pandemic and has been in the spotlight post-pandemic as they saw a huge ramp up in COVID-related sales from their vaccine, but they've also seen a huge cliff, which has worried investors in the recent year. With the pandemic now behind us, all eyes from an investor standpoint focuses on Pfizer's legacy business, which we saw in the most recent quarter actually grow 10%. Non-pandemic related sales grew 10% in the most recent quarter. Shares of Pfizer currently trade at a market cap of $162 billion. However, that has been much higher in recent years, as the stock is down roughly 40% over the past 12 months alone. Given that we've seen the growth in the non-pandemic related sales, as well as a loaded pipeline for the company, looking at the valuation here, which we're going to look at here in a second, it's really a low floor situation when it comes to Pfizer. Before we look at valuation, let's look at the dividend, as Pfizer pays a dividend that yields 5.9% with plenty of runway ahead, with a payout ratio hovering only around 50%. In terms of valuation, to no surprise, shares are cheap. Analysts are looking for EPS of $2.24 in 2024, which equates to an earnings multiple of 12.8 times, compared to a historical average of 13.2 times. This brings us to high yield dividend stock number 9, which is International Business Machines, or IBM. The old legacy Big Blue, a technology juggernaut that has really been left for dead. But in recent months, it's been anything but dead. IBM has seen its stock rise 14% and currently has a market cap of $151 billion as they continue to restructure and roll out new features. Believe it or not, but IBM is still relevant and looking to yet again make a name for itself in the technology sector. How are they doing this, you might ask? By focusing more on artificial intelligence and blockchain technology, two of the hottest names that you could say right now, with Bitcoin and their blockchain technology and artificial intelligence. Everyone is looking to get a piece of artificial intelligence, and IBM is no different. But with the thing with IBM, when technology prices have really soared with every stock that you look at, IBM is still a good value play within the technology sector. In terms of the dividend, IBM currently yields a dividend of 4.7%, And they have grown the dividend for 28 consecutive years and counting, making them a dividend aristocrat. Although they are increasing the dividend every year to keep that status, it has been extremely minimal. In terms of valuation, IBM has traded at an average PE of 14.3 times over the past 5 years. And over the course of the next 12 months, analysts are expecting IBM to generate EPS of $9.88, which equates to a forward PE multiple of 16.7 times. So if you're looking for a rare combination of technology exposure, high yield, and good value, IBM may be worth a second look. And that leads us to high yield dividend stock number 10, which is Hasbro Incorporated, stock ticker HAS. Hasbro is well known as being a big-time toy maker here in the U.S., with popular brands such as Play-Doh, G.I. Joe, Monopoly, and one I like, Nerf footballs, or any of those Nerf blasters they have. Hasbro currently has a market cap of $7 billion, making them the smallest company on our list today. And over the past 12 months, Hasbro is down more than 25%, much of this coming in the past 6 months alone. Well, what has changed then in the past 6 months? Well, we started in 2023 with a strong consumer. It stayed relatively strong, but towards the back half, we saw consumer discretionary spending start to fall off. We've seen credit card debt limits surpass new records and make new records. We've seen the restart of student loan repayments as well, which lowers the pot of consumer discretionary spending on things like toys. Hasbro has gone through 2 consecutive years of sales declines, and the CEO is currently going through a restructuring of the business, focusing more on high margin business and focusing even more on gaming, which I believe can not only increase EBITDA, but also increase operating margins moving forward. For those investors willing to be patient for this restructuring to play out, Hasbro pays a dividend of 5.8%. And in terms of valuation, analysts are looking for adjusted EPS of $3.79 in 2024, which equates to a PE multiple of 12.8 times, with expected EPS growth each of the next few years. The 12.8 earnings multiple compares very favorably to their 5-year average of 21 times and 10-year average of 18 times. So there we just went through a list of 10 high-yield dividend stocks, all of them having a yield above 4%, some as high as 9.5%. Down in the comments section below, let me know which of these 10 high-yield dividend stocks do you like best. And if you haven't done so yet, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.